Edward Stevenson with TimelessWealth.net, and this is a trade a day with YRC Worldwide, stock symbol YRCW. In this video we'll talk about timing, show you two techniques for entry when executing a trade, and discuss the midterm outlook for YRC. The small body and long upper shadow on Monday's trading formed the spinning top candle, a classic sign of reversal. Tuesday's trading session, this next candle, confirmed that reversal to the downside, which eventually led to a lower open for Wednesday's trading. This particular perspective breaks down trading into 1 minute intervals for the past two trading sessions, the left hand side being Tuesday's trading session, the right hand side Wednesday's. Movement to the downside on Tuesday's trading session evidently pointed to a lower open on Wednesday's trading session. That's exactly what happened with this gap down, and then movement to the upside. There are two techniques to entering on a trade of YRCW. In particular with this case, we'll use a 2-month chart to depict the first technique using supporting trend lines. So for instance, if we were to depict a supporting trend line based on the high coming off of this trading session, let's just reference that. That would be 29 cents per share. We would look for a pullback entry of 29 cents per share, and then we look for the price to hold above a pivotal supporting level, for instance this one being 26 and 9/10 cents. The intraday perspective shows us the price did break below that minor supporting level of 29 cents per share, and actually the charts will show you that it dipped as low as 28, although had you been waiting for a fill at 29 you probably would have got in. The other technique is a break to the upside, and this is the technique that I actually personally prefer. In this case, instead of looking for a supporting trend line to enter on, we're looking for the market to break to the upside, break above a resisting trend line. In this case, I used the low coming off of Tuesday's trading session, given the price gapping down to open trading on Wednesday. Here's a rough line I used to represent that low of 31 cents per share, and back to the daily perspective, we can see that as the market broke above it on strong trading volume, we had that buy signal occur and the market trended to the upside almost to 36 cents per share, which is non-surprisingly a pivotal level of resistance. In either case, whichever technique you prefer, this trade turned out to be a gain of up over 10%. Whether you got in at 29 or 31, easily could have liquidated at 34, 35 cents, which was an ideal trade, a quick move given the fact that the market is responding to that pullback that occurred the past two trading sessions, and once again heading to the upside. With that being said, what I'd like to do now is just look at the midterm view of YRCW. We focused on the intraday view. We talked about short, quick, effective trades given the volatile nature of YRCW. Now let's take a look at a longer term perspective. These trend lines in blue represent levels of support and of resistance. This one, for instance, representing 26 and 9/10 cents supporting level. There are other minor ones, but these are the main ones I like to focus on. A pivotal level of resistance, 36 cents per share, followed by 42. And all in all, if we take a look at, say, the yearly chart, you can see that while we're making progress to the upside, gaining, let's say, 10 cents per week, the true trend will not be reversed up until the price does break a very significant level of resistance. And in this event, I chose the bottom coming off of early 2010 levels, and that was 63.5 cents. So back to the 6-month chart, that'd be this level here. If the market can break above it, and it's a bit of a long shot from these prices, but again, should the market break above it, has a really good chance of reversing trend and heading to the upside, testing levels from up over a year back. Again, this was Edward Stevenson with TimelessWealth.net. Thank you for listening.